there. This is Janet LeBlanc with Paper and Spark. Oh, let me do this. Look at this fun stuff. Anyway, I am here with a bonus pre-recorded session of the Coffee Break series for 2025. I wanted to get this out before the end of the year. I'll explain that in a second. But first, if you are not familiar with me, if you're new to Paper and Spark or the world of Paper and Spark, like I said, my name's Janet. I'm a CPA here in the US. I specialize in helping makers, artists, e-com sellers, physical product sellers with the financial side of running a shop. And I founded Paper and Spark in 2014. We are officially 10 years old to do that in order to help serve that audience with this mission. I actually used to work in public accounting long ago, and I desperately needed a creative side hustle and a creative outlet. So I started selling handmade jewelry on Etsy back in 2011. Figured out that there were a lot of makers and artists out there that struggled with the business side of running a business, with lots of questions about taxes and bookkeeping and paying themselves and all of that jazz. So that's what made me decide to start Paper and Spark. I don't want overwhelm on these type of topics to hold you back from making money and achieving your entrepreneurial dreams. And thus, that is why we are here. Every year around this time of year, I start offering free tax trainings called the Coffee Break series. This is like the 8th or so year that we're doing this. And the Coffee Break series exists because we tend to neglect the financial and tax and bookkeeping side of things throughout the year. No judgment here. It's totally normal. You're not alone if you've been doing that. And around December 28th, December 29th, like clockwork every year, because like I said, this is my 10th year doing this, the questions start to pour in. The feeling of overwhelming confusion and anxiety starts to land in my inbox from y'all. So I created the Coffee Break series several years ago to help get ahead of that. My goal with the series is to provide free, bite-sized, in plain English trainings to meet you where you're at this time of year. The training series officially starts in January, the live sessions, but I'm kind of pre-recording but live, so it's not going to be edited. If you happen to be here, hi. I'm pre-recording this session because I want to talk about something that potentially needs to be done for your business before December 31st. So I want you to have access to that if you need it. And I just didn't have time this time of year with the holiday break coming and kids out of school and family coming and all that to schedule it like a regular live session where y'all can show up. So instead, I'm recording it now. I'm going to disperse this and you can watch it at your leisure. If you're here, obviously you already figured all that out. All right, so what I want to chat about today is all things paperwork surrounding this time of year. So specifically, I'm going to cover what to do with your paperwork, like how to hold on to your receipts. Do you even need receipts? That sort of thing. 1099-Ks, which are a specific type of paperwork, and BOI reporting updates. This is the thing that you may need to deal with by the end of the year, this last one. So if you're watching this and it's already 2025, totally fine. You may want to just like skip over the end when I start talking about the BOI reporting if it doesn't apply to you. So when it comes to paperwork, I know that a lot of times we're guilty of saving receipts or saving invoices or saving documents, but kind of shoving them all in a drawer, shoving them all in a shoebox. Housekeeping stuff, I don't need to cover that because this is really pre-recorded, so we're totally fine. My disclaimer that I'm going to do at the beginning of every Coffee Break series, I'm a CPA, but I'm not your one-on-one CPA. Everything that I'm going to talk about in the Coffee Break series is provided for general educational purposes only. If you need one-on-one help, if you have one-on-one questions, please reach out to a professional to get advice specific to your personal and business finance situation. So like I said, I'm going to release this one for you to watch at your leisure, but you can show up here on Crowdcast at 1 p.m. Eastern on these dates and I will be teaching live. The replays will also be available for these if you're not available at 1 p.m. Eastern to watch it. If you come live, it's easier for you to ask questions and submit questions in the Q&A time. But all of these replays will be available until the end of February. These are the topics that we're going to cover. I'm going to start and finish the series with a spreadsheet open house, a bookkeeping Q&A, and a Paper and Spark spreadsheet open house. And then our middle sessions will be breaking up the Schedule C into bite-sized chunks. My goal is to keep the teaching of all of these limited to your theoretical coffee break, so like 20 to 30 minutes, and then a few minutes for Q&A at the end. So on to the concept of paperwork. Why does it even matter? Having some sort of organization system for dealing with your paperwork for your business finances is just going to make doing your books a lot easier. And it creates this paper trail for the unlikely event you are ever audited. If you are ever audited, if your tax return or any of your tax forms are ever audited, you need this backup documentation to substantiate, which is a fancy word for prove, the numbers on your tax forms. Okay. Let me get rid of this silly title. I was excited for it to come in and now it can go out. And side note, I got to show y'all my Eeyore sweater. Okay. Eeyore is my nickname. You don't become a tax accountant and not have an Eeyore personality. So I hope that you like it. All right. So we need to have our paperwork organized to do our bookkeeping, make our bookkeeping lives easier, and in the unlikely event of an audit. Now, let's talk about what having that documentation organized, what it actually means. What are we required to hold on to? Do they have to be physical printed out copies of things? Can I have digital copies of things? The best place to start reading about what the IRS, i.e. the U.S. federal government, requires us to hold on to when it comes to paperwork is Publication 583, which I'm going to link to in the chat so that you have access to it whenever you are watching this. It's all about business record keeping. All right, lots of useful stuff in here. What I want to focus on starts on page 11. We talk about record keeping. They're going to explain to us why we need to hold on to records, what sort of records we need to hold on to, supporting documents, let me sum some of this stuff up for you. Digital copies of your receipts and invoices and whatnot are fine. You don't have to have the original physical copy of a receipt. You are totally allowed to take a picture of a receipt, save it on the cloud, and throw away, trash, or shred the original. Email receipts are fine. You don't have to go print them out. We do need itemized receipts though. So this is always an important note that I like to point out. Proof of payment of an amount by itself does not establish that you are entitled to a tax deduction. You should also keep other documents such as credit card sales slips and invoices to show that you also incurred the cost. So the takeaway from this little note and some other stuff they say in here, your credit card statement, your bank statement by itself is not good enough. Okay. It's not good enough to see that you have a $100 charge to Target on January 17th. We need to know what you bought at Target so that if you are audited, you can prove it was a business purchase at Target, because I bought glue, paint, supplies, mailers, tape, printer ink, whatever at Target. Not did my family's Christmas shopping at Target, and that's actually what this $100 charge is. We don't know. That's why we need to save those itemized receipts with the actual information on the stuff that was purchased. All right, so something I want to point out there. We're holding on to the receipts. Anything related to what we're buying for our business, anything ordinary and necessary in the course of running our business is what we want to hold on to for those receipts. Digital or physical is okay. How long do we have to hold on to this stuff? I don't want to have 10 years of receipts sitting around somewhere in my office. So we can look, I think this is also screenshotted from somewhere in this publication, the period of limitations. This is how far back the IRS can ask for documentation. So basically how far back you could possibly get audited for. So make this a little bigger. The minimum period is going to be holding on to receipts for at least 3 years. And that's because if you owe additional tax and don't have these other situations apply to you, we can go back up to 3 years and audit you. All right. If you didn't report more than 25% of your gross income, if you understated 25% or more of your gross income, we can audit you up to 6 years in the past. If you committed fraud or didn't file a return at all, fraud is usually when you knowingly did something wrong, then there's no statute of limitations. So if you plan on committing fraud or you plan on just not filing when you're supposed to file, hold on to your receipts forever. Okay, that's the takeaway there. So I think most accountants' rule of thumb will be hold on to your receipts for at least 3 years. You can probably start, so you can feel really good about getting rid of them after about 6, unless you filed a loss from worthless securities or a bad debt deduction. Doesn't apply to many of us. Then I would say hold on for 7. But at least 3 years is the minimum. How long after 3 years is kind of up to your risk tolerance and how you feel about whether you're doing any of these things here. So hold on to those receipts for at least 3 years. Organization systems, just a few tips here. You can have a physical file system or a digital file system or some combination of both. Either way is fine. When it comes to my emails, I think it's really good to just have like a folder system inside your email account, a labeling system inside your email account. You can automatically file them or manually file them, whatever is easier, into different folders categorized by expense category or month of the year or both if you want. Printing to PDF, saving those screenshots, any of that is fine. Any of those ways are fine. Just make sure that wherever you're storing your things digitally, they are saved and backed up, ideally in more than one place, also just to be safe. Physical file system, I see people use those accordion folders a lot. People use envelope systems. They'll keep envelopes in their purses and just sort receipts into an envelope in their purse. And then once a month at home, empty out that envelope into the accordion folder or file folders. You can also, like I said, just snap a pic of your physical receipts and get rid of the original if you don't want to hold on to the physical copy. A lot of receipts fade over time too, so sometimes snapping a pic is a good idea anyway. Here is just kind of like a little checklist idea of the things that should be part of your paper trail if you were ever audited. These are the things that you want to have on deck to show the auditor to back up the numbers on your tax forms. Receipts for any expenses, those itemized receipts, okay, not just the bank statements and the credit card statements, although those are nice to have. I also would recommend statements from any of these e-commerce platforms that you're selling on in case you're ever not able to log back into them. It's probably a good idea to screenshot or print a PDF your annual statements if you're able to do that. Invoices or receipts for any sales, a mileage log. I don't think that this dives into the mileage log in this particular IRS publication. I'm not sure. There is one that goes in depth into the mileage log record keeping that they want to see, and it gives an example of a log. That's a really good one to look up. It's in another publication though. Any permits or licenses that your business has, your sales tax permit, your DBA, your LLC registration, if you have one, just have those handy and on file. And any other legal documents or contracts, trademarks, copyright, that sort of thing. Contractor contracts, employee contracts, obviously, you want to hold on to those. I would, if you have a monthly bookkeeping process, if you're using a paper and Spark spreadsheet, hopefully you know that every month you get an email in your inbox on the first of the month with your monthly bookkeeping, update your books, update your spreadsheet checklist that's specific to your spreadsheet. Part of that checklist should be dealing with those documents, filing those receipts away, forwarding the emails into the right folders, whatever your process is, make it part of the monthly checklist just to help you stay on top of it. So that's kind of like the paperwork in general. I want to talk about some specific forms that you may or may not be getting in the mail, because it's something else that I hear a lot around year end, new year, confusion over what to expect. Are you going to be provided with a particular piece of tax documentation in the mail, or are you on your own? And if you get paperwork, what does it mean? So the most likely piece of paper that you may receive is going to be a 1099-K, and I'll talk about that in detail in a minute. If you work a regular day job, then you may get a W-2 in the mail from your employer, right? That just reports your wages. And if you had any tax withheld from those wages, it's going to be reported on that W-2. You need that W-2 to do your taxes, to do your Form 1040. If you have bank accounts, investment accounts, retirement accounts, a brokerage account, anything like that, you may get 1099 divs or DIV or INT if your bank or your investment account needs to report dividends or interest paid to you. You will need to provide your employees, if you have employees, W-2s at year end. 1099 NECs is something that your business may need to report. If you have any contractors that do service work for you of $600 that you paid $600 or more throughout the year, then you may be required to send those contractors a 1099 NEC. All right, $600 more of service-based work. So all these things covered. Let's talk about 1099-Ks. This is something that you may get. So the 1099-K, it's an informational form that what are called payment settlement entities have to send you and the IRS to report funds transferred to you during the year. And funds are going to be gross revenue. So not even usually the actual amount transferred to you, but gross revenue that you made on that platform or via that payment processor during the year. So 2024 right now. It is a very simple form. It looks like, okay, so I'm going to put this in the chat. Again, this is a link to the IRS resources on 1099-Ks. Oops, I said 1099L. It's 1099-K. But that is the link. And it has some information on who sends it, who gets it, what's the reporting threshold. Can we just see what it looks like? Would that be too much to ask? Show me the PDF. All right. So it looks like this. It's a very basic form. It basically is going to report your total gross amount of revenue for the year, and then it will break it up by month. All right. And then you get a copy of this form, and the IRS gets a copy of this form. So what is the point of the 1099-K? It's a matching document. It is a document that is going to alert the IRS that you received this much money, you made this much money from that platform during the year. So for instance, Etsy may send me a 1099-K that says Paper and Spark made $25,000 on Etsy this year. Hey, IRS, Paper and Spark i.e. Janet LeBlanc, made $25,000 on Etsy this year. So now the IRS has a heads up that I need to be reporting $25,000 in revenue somewhere on my taxes, right? There's more than one place it could end up going, but they have that heads up now that I need to be reporting this. Now, the 1099K, that's what I mean by a matching document. It is alerting the IRS to look for that amount somewhere on my tax forms, right? Now, it does not mean that if you don't receive a 1099K, then whatever amount of money you made was not subject to tax. That's not what it means. And let's talk about why. So who even gets one of these? All right. Prior to this year, tax year 2024, the threshold to receive a 1099K from these payment processors has been $20,000 and 200 transactions. But the 200 transactions is really negligible. If you're making $20,000 on most of these platforms, you have way more than 200 transactions, right? So Etsy, Amazon, Shopify, PayPal, Stripe, whatever, all these payment processors needed to send you a 1099K for 2023 and prior if you made $20,000 or more on their platform. Gross revenue, okay? Before expenses, before fees. That's what I mean by gross, okay? Not that it's disgusting, but before any fees are subtracted out. Now, the IRS has gotten the gist over time that there's kind of this disconnect we have. Some of us, unfortunately, think that if we don't get a 1099K in the mail, these sales are not reportable. I made 20K. Nobody sent me that tax form in the mail. I guess I don't have to report this, right? That's kind of the gist with some misinformed or uninformed people, for better or for worse. So the IRS is like, thinking because of this, we are underreporting millions of dollars of revenue. They're missing out on all these taxes that they want to be making. So you know what they're going to do to fix this problem and get that money? They're going to lower the 1099K threshold. They're going to say, the more of y'all that get this form in the mail, the more of y'all are going to start reporting this on your taxes, as you should have been all along. So several years ago, they announced that they were going to change the 1099K threshold from 20 grand to $600. What a drastic jump, right? Now, like all things government, they have had trouble actually doing this. Oh, we don't have enough employees. It's too much paperwork. It's confusing for computers, whatever. So they keep saying they're going to do this, and then they delay, and then they delay, and they push it out. And it has been pushed and pushed and pushed. This year, supposedly for 2024, they're attempting to stair-step a middle ground between $20,000 and $600, and the threshold is going to be $5,000. All right. Now, in some years, on like December 28th, they've come out and said, "Hey, never mind, we're not going to do this yet. We'll do that next year." So who knows what will happen? I'm recording this on December 19th. But right now we're saying for tax year 2024, if you made $5 grand in sales on these platforms, Etsy, Shopify, Amazon, whatever, any third party processor, then you will get a 1099K in the mail. And then we're saying for tax year 2025, theoretically, we're going to make it all the way down to that $600 threshold. Now, again, this is just a threshold of who is going to get this piece of paper. Whether or not you meet the threshold, whether or not you get the piece of paper really doesn't matter, because you should be reporting the revenue, whether it's $500, whether it's $5,000, whether it's $50,000 on your taxes somewhere, okay? Doesn't matter if you get the 1099K or not. If you do get the 1099K, you sure as heck want to be reporting this revenue somewhere properly, because now the IRS knows that you're making that much in revenue, all right? So that's what a 1099K is. This is why these third-party, I don't know why I can't say this today. This is why these third-party payment processors have been asking you throughout the year at various times. Hey, what's your tax ID number? Hey, what's your tax information? What's your EIN? What's your social? Like, give us this information. They need that info about you in order to properly send you this 1099-K. Because besides that gross revenue number, your social or your EIN and your business name and address will also go on it. Also, heads up again, keep in mind it's gross revenue. It doesn't mean that you are going to be taxed on this amount. It just means this is the amount you need to report for gross total sales at a minimum, because you're probably adding this 1099-K to some other numbers too. You have sales from multiple sources, most likely. This is why keeping up with your books and having a bookkeeping system to support you is so important, because we don't want to pay taxes on just this total revenue number. We want to know all our deductions. We want to be able to subtract out the Etsy fees, the credit card processing fees, the platform related fees, our cost of goods sold, our advertising, all the things, so that we only are going to pay taxes on the net result, right? That's why having your books up to date is so important. So don't get scared if you get this 1099-K and it's got this giant revenue number on it and you're like, I can't pay taxes on that much. You do get to subtract your deductions. So thinking about that bookkeeping system to support you, do you have all your numbers for 2024? If you fell behind, if you had the best intentions and maybe started updating every few months, but fell behind at some point, or if you just haven't touched 2024 at all, there's still plenty of time. Your taxes for your business, if you're a sole proprietor filing a Schedule C, are not due until April 15th. So now's the time for you to come up with a plan of how you want to tackle this to get caught up step by baby step. And of course, Paper and Spark has got resources to help you with that. I want to show you a couple things. First and foremost, and the link at the bottom of the screen right now goes to this page. We have the bite-sized bookkeeping bootcamp. This is my program designed for Etsy sellers and Shopify sellers to help you get caught up on your whole year of books in the least amount of stress possible. We break it down into tiny baby steps so that you can do the work in manageable chunks. Comes with like checklists and everything you need to get it done. It comes with either an Etsy seller spreadsheet or the Shopify seller spreadsheet. Comes with an inventory worksheet. And we break everything up into little, like I said, bite-sized chunks to help you go from blank books to done books. And it's even got some tax prep info in there to help you understand where these numbers are even going on your tax return. Yeah, that's what the boot camp is all about. So you can click that button if you need to learn more about that. Beyond that, I do have, if you don't need the whole boot camp, but you need a bookkeeping system to support you right now, you're welcome to go to shop.paperandspark.com and check out all of the different bookkeeping templates we have. They import in from Etsy, Shopify, Square, PayPal, Amazon, eBay, or Squarespace. And you can bundle it with an inventory spreadsheet too if you have physical inventory. So those are the resources that we have to support you if getting caught up for 2024 is something that you need to do. So last thing I want to talk about, the most timely thing. Oh, Stacy, hello. Thank you for being here. Can we purchase the boot camp without the forms? You can't purchase the boot camp without the forms, but I have a coupon code if you already have if you already have the Etsy seller spreadsheet or the Shopify seller spreadsheet. If you go log into your account at paperandspark.com and click on whichever spreadsheet you already own, there's a coupon code in there waiting for you that you can use on the boot camp to shave off some of the price since you already own one of the spreadsheets that's included in there. So go check that out. And if you have trouble finding it, just email me at hello@paperandspark.com and I can send it over to you. All right, so talking about the BOI report real quick. I'm not sure if you've heard these things, if you've ever heard rumblings throughout 2024 of this like new requirement that business owners have to do by the end of this year. There's been a lot of like fear mongering out there on this topic. And it's mostly because the fines that have been threatened to not complying on time have been very high. It's supposed to be $500 a day. So the good news is it's a very easy to do. And possibly better news is that now we don't even know if it's going to be enforceable or not. So I'll talk about all of that. I don't have slides for this part of the presentation because I have this blog post instead that I want to review, and I'm going to put that in the chat. So the new requirement is called the BOI report. It stands for Beneficial Ownership Information, and this is only for LLCs. So if you're a sole proprietor with your DBA or your fictional name, assumed name permit, and you've never registered for your LLC, which is totally fine, this requirement does not apply to you. What is it? So if you're familiar with registering for an LLC, you do that at the state level with your Department of, I don't know, usually like your Secretary of State, right? You do it at the state level. So the state knows all about you and your LLC, but the federal government does not. There is no federal government body monitoring these sorts of things. And the states and the federal government don't do a good job of talking to each other. So the Department of Treasury, the federal government Department of Treasury, has said, we want to know more about who owns these LLCs, because turns out LLCs are often used as like shell companies to shelter or disguise money laundering and particularly foreign illegal activity. Okay. So there was this Corporate Transparency Act that Congress passed a few years ago that created this new part of the Department of Treasury called FinCEN, which stands for the Financial Crimes Enforcement Network. And they decided they wanted to make this new requirement for LLCs called the BOI report, Beneficial Ownership Information. And it's really just us LLC owners telling FinCEN, hey, this is my name, this is my address, this is the name of my business, and here's like my ID, the end, my driver's license or my passport. So it's just like proving you're a real legit person, and that's it. It's a super simple form. And assuming you're not doing any like sort of money laundering or international financial fraud, you should be totally fine. So the only people that need to file this are LLCs or incorporated businesses. And it's actually, you know, you may say, oh, I only make like $1,000 of revenue and I'm an LLC. Like, am I exempt? They actually made this for small LLCs. Exempt LLCs are large LLCs that have 20 plus employees and $5 million in revenue. So probably not going to apply to us. Let's see. You can read this whole post if you want the fuller details and links over to FinCEN. An important thing I want to convey to you is there have been a bunch of spammy, scammy resources in this regard. It happens every time there's something new like this. If you go Google BOI, I'll show you. BOI report. BOIR.org, BOIR.com, file BOIR.org. None of this is the real website right here. Okay, FinCEN.gov. But there are a bunch of websites pretending to help you, and maybe they are actually fine for you, but this is my winded way of saying they're trying to charge you. I've seen lots of people pay $300 to file their BOI report. It is free, y'all. If you're at a website that's trying to charge you, you're getting scammed. All right. That's why I said there's really no downside to filing it. If you're an LLC, it's free. It takes 5 minutes. Do not pay for it. All right. Do not You shouldn't even need to like pay your accountant to help you do it. It's very easy. Okay, so if you Google it, don't end up on a spammy website. Before I show the step-by-step of how to file it, let's scroll down to this part. So who needed to file it and when? Let me back up. Okay. If you were an LLC, this became enacted for January 1st, 2024. And it's only something that you need to file for your LLC once, unless your ownership information changes. You have a new owner, you have a co-owner, maybe your address changes, then maybe you need to file a new updated BOI report, right? If you were an LLC before January 1st, 2024, when this became enacted, then you have the whole year, this whole calendar year to get it done. It's due by December 31st, 2024. So that was me. I was an existing LLC. I need to get this done before year end. If you become an LLC in 2024, after it's been enacted, then I think you had 90 calendar days after registering your LLC to file the BOI report. If you become an LLC next year and going forward, they want the requirement to be 30 calendar days. So you have 30 days after your registration to file that BOI report. So we have this big influx of people who were an existing LLC who needed to file this year. That's who we're really talking to with this at this point. And again, they're saying the penalties of not doing this by year end or doing it on time, whatever timeline applies to you, depending on when you became an LLC, was going to be these steep fines and penalties of up to $500 a day. They can throw you in jail, really crazy stuff. But so you've probably been hearing people talk about that all year, or maybe you haven't, I don't know. But mid-December, like a week or two ago, we have had lots of different district courts and local courts trying to fight this. We don't want to tell the government who we are. We this is too much. We don't want to do this for whatever reason. It's unconstitutional. So December 3rd, we had a U.S. District Court in the Eastern District of Texas issued this particular court case, issued a nationwide preliminary injunction against the enforcement of the Corporate Transparency Act, the enforcement of having to do the BOI report. And then, of course, the Department of Justice has filed an appeal, and they're probably going to duke this out in the courts for possibly the next several years. So we don't know what's going to end up happening. The bottom line is, as of right now, December 2024, you can still file your BOI report if you haven't done it already. If you've already done it prior to this, at some point in 2024, you're good to go. You're golden. If you haven't done it and it applied to you, but now you're like, do I do it? Do I not do it? You still can do it if you want to. Not doing it by December 31st, it's just not going to be, and these penalties and fines and whatever are not going to be enforceable for the time being. Now, if you choose not to file when you were supposed to, then it's going to be on you to continue to monitor this situation in the months, potentially years to come, because, depending on which side of this argument ends up winning, it may suddenly become enforceable again. And then, I don't know what the deadline will be to get it done at that point. So personally, I don't mind filing this. It was very easy. It took me 5 minutes. And I don't want to have this on my radar anymore. I have too many things in my brain. I can't keep track of anything to begin with. So I went ahead and filed it so I can be done with that. And I don't care anymore. But I'm presenting you the options. If you haven't filed it, if it applies to you and you don't care either, go ahead and do it by December 31st. If you decide you want to wait and see, that's totally fine. Just make sure that you stay on top of this situation to know when and if it ever is going to be enforceable. On that note, I made a quick little 5-minute video here that I am going to just display. I did edit this and like put out, blurred out my personal information and stuff. So if you are curious of how you want to see the step-by-step of how to file it, you can go to this blog post that I shared and see. I have screenshots here that's pretty straightforward. But if you want to actually like see it, I'm going to play this little 4.5-minute video of me doing it, and hopefully we'll be able to hear it okay. So here we go. You want to start by going straight to the legit source, which is FinCEN.gov. That's FINCEN.gov. If you Google FinCEN or BOI reporting, you're going to get a lot of these websites that are actually going to try to charge you. They're scammy. You don't want to go to any of those. You want to go to FinCEN.gov. Once I'm at FinCEN.gov, I can click on File Your Report Now. This is going to be for the BOI report. You can also go to FinCEN.gov/BOI, and you will see a ton of information here all about answering questions when it comes to BOI reporting. I'm going to go back to FinCEN.gov, and then I'm going to click File Your Report Now. And then I'm going to click this File Your BOI Report button. You have two choices. You can either file via a PDF that you can fill out. You need Adobe Reader for that. I am going to do the file online where I don't have to do it in Adobe Reader, and I can go ahead and submit it right now. Since this is my first time filing the BOI, I'm going to select Initial Report for type of filing. I am going to select to request to receive a FinCEN ID. I'm not a foreign pooled investment vehicle, so I'm going to leave that blank. This is where you want to put your LLC's actual legal name, whatever is filed on your LLC paperwork, not your name, but your business's name. Over here in the tax identification type, you can either enter your EIN if you have an EIN for your LLC, which most of us probably do, or you could opt to use your social. I always like to use my EIN in lieu of a social security number anytime that I can, so I'm going to go ahead and enter that. Next, we are going to enter our actual address for your business. For this next question, if you are filing this BOI report for an LLC that was created prior to enactment on January 1st, 2024, you will check that this is an existing reporting company. If you're filing this for a new LLC registration, you will leave this blank. It's important that you do this part right, because if you are an existing reporting company, you don't need to fill out certain information about your company applicant that you will need to do if you're reporting as a new company. So because I checked this box, I don't need to fill out this stuff over here. All right, it's not going to let me type in these boxes. I am not filing this on behalf of a minor child. I don't already have a FinCEN ID, so I'm going to leave this blank. I'm not an exempt entity. These are things like nonprofits or companies that are considered large, like have over $5 million in revenue. There's a full list of what an exempt entity is on FinCEN's website if you want to look that up. Now we get to the part where they're going to ask me my information, my legal identification information. I just have to give them my first and last name, my date of birth, my residential address, and then some form of photo ID, basically. You have the ability to scan in your driver's license or your passport. All right, that was it. We did it. Not too shabby. Okay. All right. So that was it. Hopefully that is something that you can use or revisit if you decide to file that BOI report. you do have until the end of the year theoretically to do it. I don't know what's going to happen with enforcement. But that's what I have for y'all for today. So I don't, our other live sessions shouldn't run quite that long. This is what we will be reviewing though. So I will see y'all on January 2nd. All of these are at 1 p.m. Eastern. The replay of this one and the replay of these will all be available until the end of February. If you have any questions about anything we've covered, reach out to me at hello@paperandspark.com. If you need help getting caught up on your books, I encourage you to check out the Bite Size Bookkeeping Bootcamp, and I will see y'all next time.